Welcome back. You're watching The Capital Point. If you're just joining us on do follow the conversation on Twitter. The hashtag is The Capital Point. And do follow us on @Metropole TV Kenya. We are streaming live as well on YouTube, Twitter, and Facebook. Now, just after that look at the numbers around fintech and what's happening within the space, of course, it's interesting to note that Kenya is ranked highly in financial inclusion, second only to Seychelles and to South Africa, that's on the continent. And of course, this is largely driven by mobile money and the rise of fintech. Joining me in studio now to take us through this is perhaps a man who needs no introduction within the fintech space, Eddie Ndichu, the CEO and co-founder of Wapi Pay. Thank you so much for finally making time to be with us on Metropole TV. Of course, quite an interesting space. The last decade happened, and Kenya really ranked highly. And when we go to conferences, and the first thing they say is M-Pesa or M-Pesa, or whatever it is they refer to it as. Yeah. But M-Pesa is what, almost 10 years old? 12 years old now, 2008. Yeah. What next? What are you looking at in terms of where we're going with this decade?
Okay. Well, thank you, Terryanne. Thank you for having me at Capital Point. I got it right?
Yes, you did.
And happy New Year, and welcome to the new decade. I think we spoke before, and you said this is the decade for fintech. I agree with you. Mm-hmm. Most of the biggest innovations in financial technology, or even in technology itself, started out at the tail end or the entry into a new decade. PayPal in 1999, M-Pesa in 2007, etc. Wapi Pay in 2019. Mm-hmm. Can see what I did there?
I can see what you did there.
But what's interesting, going into a new decade, a lot of new ventures or infrastructure start being built, or ventures get into financial services that then define how things will shape up in that decade. Mm-hmm. So 2020 will be a very interesting year, I believe. If you look at the last 10 years, a few things to take note. If you look at funding in startups looking at building or have started building infrastructure to deliver financial services more conveniently, more efficiently for customers, and just taking that customer focus. Funding for these startups has been immense, especially in Africa. If you look at 2018, it crossed $1 billion. If you look at last year, we're expecting it to have crossed $1.5 billion. And this is exciting, and this is interesting. What is interesting is where the funding is coming from. It's not so much the West, it's also coming from the East, and largely because of last year. And if you see one of my former employers, Ope, what we were able to set up in Nigeria, I think this has opened up the appetite for supporting startups that are transforming or building infrastructure around delivering financial services. And this is important. This is important because we will continue to see consumers enjoy efficiency, consumers enjoy affordability, more education, more access into financial services. So it's a very exciting decade, I believe, for so what is the future. And I think we'll continue to see this in a form, especially in Kenya, what I coin as the post-mobile money era.
Mm-hmm. Well, having worked within the banks and led some of the strongest digital teams across East Africa, what, in your opinion, does fintech in the next decade look like?
It's a great question, and no one has a crystal ball. Things happen so fast. In 2007, you'd never have thought there would be a platform like M-Pesa a decade later or 12 years later. And there's a lot happening across the globe beyond just Africa or Kenya. If you look at the Asian corridor, which is very successful with fintech. But 10 years ago, we never used to have that phrase, fintech. It was called mobile banking or digital financial services.
Which you corrected me. So I'm stuck in the past for a bit.
But if you look at the nature of how things have evolved, it's largely technology companies building infrastructure to be able to deliver financial services, and they're largely being technology driven. It's not just the startups, but it's also the large banks that are doing this within their teams. Yeah. It's also the institutions that are not necessarily in financial services or licensed financial services institutions getting into this space. And how do we deliver, given that we have a service that is offered directly to consumers, complete convenience and efficiency in accessing financial services. What do I mean, Terryanne? Because of the last 10 years, financial services is evolving as a utility. And it's not just a utility for licensed financial institutions, but also non-licensed financial institutions, where they're asking themselves, how can we better improve our business, how we deliver services to our consumers, by offering an element of fintech or an element of financial services. I think this will continue to happen. In Kenya and largely in Africa, the post-mobile money era, consumers in Africa largely know how to use their mobile phones to access money, and interesting business models have evolved from that, from micro-lending, small elements of savings and investment. We've seen betting that has come and gone, but it's really about making money more accessible and making money move faster than ever before. And I think these business models have introduced into new business models into the market, and we're going to expect them to grow and take shape significantly in 2020. You know, the rails of mobile money just created the form. I think the factor is now for this decade. And we'll continue to see this in this year.
Let's look at the banking industry a little bit before we get into the micro-lending space, because I really want us to focus on that as well. But the brick and mortar business, and you know, if you look at global trends and reading where they're heading, and many of them saying, you know, 40% of the banking services will actually not be, you know, we will not need to walk into a bank. Which has happened here, you know, in some of the banks. So where do you see the place of the bank, and how do you see banks then reworking the next phase?
That's a great question, and I think it even from my previous experience in banking, it used to worry us a lot. I don't think banking is going to go away, but the function or utility of banking is what the startups or tech-driven companies are trying to deliver. Banks' role will still continue to exist. The question is, in what definition? What we're seeing startups and technology companies do, like ourselves, is building new infrastructure that allows consumers to access cheaper services, more efficient services, more convenient services. Now, it's not that we're competing with the banks. It's largely to get the banks to move a lot faster than they are, or they can, because sometimes, you know, these are well-established institutions. Moving these institutions is not an easy task. But how do they quickly evolve into this new level, this new world, where consumers are demanding a lot of these conveniences and affordability? So the teams around outside banking are really working hard and are being well-funded to build this infrastructure. The next phase is this: how does this infrastructure work with the existing banks? And then how do we deliver these services in partnership with banks? And I think there's a sweet collaboration between the two that can create quite a bit of acceleration for us. And I see the bank role still being relevant. The question is what the role may change slightly, but I still see it being very relevant.
Talking of collaboration, the ecosystem itself, and you alluded to, you know, the amount of money that's coming in either from private equity, whether it's from the West or the East or Africa, hopefully Africa.
Yes, and we need to develop our capital markets.
Exactly, into Africa. And I'm just curious about where you see the opportunities for developers. You know, we've got a very vibrant innovation community in Kenya. Correct. Tech hubs, left, right, center, incubation centers. So where do you see the opportunities being?
So I think for startups, if there's a fantastic, and like I said, there's two people really who we're looking at in the next decade. You know, the technology, the big technology companies, and largely the startups. The beauty about startups is they understand the local market and they understand the problem that they're trying to solve. I think for us is to encourage those communities of developers to continuously try and build without fear, but with boldness, infrastructure and technology that will solve that problem. I think the rest of the pieces will fall in place. One critical one is funding. there's a lot of funding from the West. If you look at the fintech database in the West and the fintech ventures in the East, they're largely supported by very large capital, and this capital allows them to really get an opportunity to bring all those pieces and all those blocks, such as regulation, partnership, together, as well as be able to build that infrastructure. We need to support these local developer community with funding. I see appetite from the East, and I think this year especially, and going into the next decade, we'll see a lot of them being supported by funding from the East. But also, how do we create funding within Africa to support these fintechs, to be able to challenge these problems and build for solving these problems? So these people need to be hubbed, they need to be encouraged, they need to be supported, whether it's by startups like ourselves or whether it's by large institutions, financial service institutions, or established banks, to be able to charter this path of solving this problem with new infrastructure. That's how I largely see it.
Okay. Perhaps with the lens of Wapi Pay, you can tell us, what do you think, what does it take to become, the most successful, or to be a successful app or a successful fintech? And the reason I say that is because it's a shame that we're still celebrating M-Pesa until today. We should have by now developed something, as Kenya or as Kenyans, like as big as M-Pesa or bigger than M-Pesa. So what will it take to get there? And perhaps with that you can tell us a little bit about Wapi Pay, and hopefully you'll be the next M-Pesa.
From your mouth to God's ears. So a lot of things are needed to help support startup ventures, because even M-Pesa was a startup venture within an institution. Be able to evolve into something that impacts lives and transform lives within a community. One is the regulatory support. If you look at largely how M-Pesa came into regulation, or mobile money across Africa came to regulation, different corridors have taken different approaches. But largely Kenya is really creating an environment for testing to happen. The only difference is that this environment was created with the background of established institutional infrastructure, such as telecoms. So for the central bank, it was easy. I wouldn't say easy, it was okay for them, or they were at least comfortable for them to support a solution without regulation, because there was a supporting industry that is running it, which is a telecoms industry, and there was a structured way of regulating that industry, which is a communication authority. And I think just being able to rely on that, and on the backdrop of that, they were able to offer licensing to these institutions, or at least allow them to play in the market. And it's not coincidence that the only payment license in Kenya is given to the telcos, and this, I think, is a big factor, a big reason for that. But what is exciting is we're starting to see our central banks start to partner with other central banks, not just in Africa, but in markets that have developed fintech regulation quite aggressively, such as Singapore. And I think we'll continue to see that and enjoy that, the relationship between the Kenya Central Bank and the Monetary Authority of Singapore, where Wapi Pay is also incorporated. So for ourselves, regulation is critical, and we continue to maintain a good relationship with regulation, even based out of Kenya or operating in Singapore, as we are set up today. The other piece is funding. You need capital to implement these ideas, and of course an environment to test these ideas. From the time we conceptualized Wapi Pay 3 years ago to the time we incorporated last year, both in Kenya and in Singapore, the product or the services we're offering have taken almost a zigzag form in terms of how we've ended up into, okay, what is the service we're offering, what is the problem we're solving.
So what is the service you're offering?
So today at Wapi Pay, we're offering, so we're the first and leading startup out of Africa, offering Africa-Asia payments. So we want to make it extremely easy for an African to be able to receive payments or make payments to anywhere in Asia, and the other way around. For Wapi Pay, what is very interesting that we saw right at the beginning was that the largest economies globally are coming out of Asia and Africa. The largest advancements in financial services, technology in financial services, were coming from Asia and Africa. So for us is how do we bring, and of course, the largest populations are coming from Africa and Asia. These two are big markets. How do we bring these two big markets together? And the solution we're solving is how do we build the infrastructure to allow something as simple as payments be able to happen between these two big markets, these two big corridors of the world. And that is interesting because it's not remittance anymore, because that's US, UK, Canada into Africa. It's now
trade.
It's trade. It's for goods and services. And I think creating marketplaces and creating opportunities for people to do trade goes into really advancing the livelihoods of not just Africans, but also Asians themselves who are involved in trade. And this is the opportunity for us today in the next 1 to 2 years. Eventually, is to be able to offer any African or Asian a global account to be able to receive or make payments instantaneously. And we're talking about 30 seconds. Today, we're relying largely on platform integration. So a big platform on that side, a big platform on this side. But eventually is how do you build this into a global account for Africans to be able to ease? And I think that's what Fintech is going to do in 2020. Banks are going to receive a lot of pressure in having to think of themselves globally and think of themselves just like the way I can send you, Terryanne, 5,000 shillings in 30 seconds. How do I do that to somebody across the continent, in India or in China or in Thailand or Indonesia? There's going to be a lot of pressure in thinking more global, and you can see a lot of our partners locally also thinking very hard about this. And that is what we're trying to solve for Wapi Pay, because we have 2 billion people, or over 2 billion people on that corridor. We always argue about a deficit between Africa and say China or Kenya. The first thing we need to, we saw that we need to solve for is it needs to be financial infrastructure, needs to exist and be robust to be able to offer the efficiency, convenience and affordability to allow these inflows and outflows to match up. Secondly, if you're able to open up the 2 billion market through a solution or service like ours, to allow any African to sell any of their products or goods and services into this 2 billion market, I think it creates an interesting opportunity and a future for Africa, not just Africans, but also Asians.
Absolutely. And speaking about the future, just tell us perhaps a little bit about some of the lessons learned from, ecosystems that are matured or maturing, and how we can apply some of those within a developing one like ours.
That's a great question. I think the established institutions need to support those ecosystems, because ideally you have all these people graduating, you have all this workforce coming out, and they need to get to work. One of the things when we're setting up Wapi Pay was, or at least what really sped us up to set up Wapi Pay is, there's a lot of people out there who want to work, and they need to get to work quickly, and they're good talent, but they need experience. So how can we quickly build a service out of Singapore and allow them to start building and start setting up some infrastructure to allow us to offer the service? I think this is important, and that's why we pushed very hard to set up Wapi Pay. Secondly, the talent that's coming out of this corridor needs experience. It needs work and it needs experience. So that's the next thing for us. How do we leverage with corridors like China or India, or largely the Asian markets that are pretty advanced in their talent, in building infrastructure and in building technology, and in part and work with those teams out of those corridors together with the teams here, so they can also learn and scale up very quickly and support businesses like Wapi Pay.
All right. So as we wind up, and speaking of support and finance, most of the capital that comes in, as you correctly say, is from the West and from the East. Are we going to get to a place where we are seeing African capital or Kenyan capital supporting our own developers? And what would it take for us to get there?
I think it's more startups like ourselves coming out in front and ahead and saying, look, we have great ideas, we have great minds, we need to build businesses. I think one of the things that surprises everyone is how we were quick to set up in Singapore as well. It is possible to start a business and set up your operations or your services in a forward market like Singapore, because you know what value it's going to add into your business, and you know you're going to tap into talent, you're going to tap into infrastructure, you're going to tap into networks, etc. I think we need more businesses like Wapi Pay coming up and setting up. I think a lot of it will get support and funding from West and East. We've seen it even with established fintechs here. Last year receiving quite a bit of, quite some chunk in capital and funding. This needs to continue, because this will nudge the local investor community. Secondly, I think there's a lot of understanding that needs to be delivered in the investor community in terms of the expectations on return for these ventures, because it's not like buying a Safaricom share, right? You know, the rate of return is not as efficient. But organizations that understand investment need to set up funds that support these kind of ventures and be able to communicate to the investor community very clearly, this is how this works, right? This is how your capital is being used. These are the interesting businesses. This is the expected return. This is the amount of risk, etc. Until that happens, there's always this big expectation. I'd rather buy a plot in Kiambu than put money in a startup or a fintech. But how much property are you going to buy?
It might be a Facebook, or it might be a...
Yeah, those are the things that the education needs to happen, and our mother company, Wapi Capital, tries to do this. And I think going forward, African investors need to be educated about the opportunity. The opportunity comes with network and support. That's also required to be able to actualize that investment. Will we see African funding supporting fintechs? I think this is the decade. I think this is, I mean, if the less risky Asia capital can easily come into Africa, having seen with OPay in Nigeria, which I was involved in setting up, I think this is the time for the African investor to wake up and say, are we going to own this capital, or are we going to be having it owned elsewhere?
Okay. Yeah. Well, I think that's a perfect place to end our conversation. Thank you so much, Eddie. We've been in conversation with Eddie Ndichu, CEO and co-founder Wapi Pay, taking us through his expectations for fintech in 2020 and of course the decade as a whole, and some of the trends that we're expecting within that industry. Well, you've been watching Capital Point. Thank you so much for keeping us company. My name is Terryanne Chebet. Until next Wednesday, let's talk business.